morning, everyone. Zach from Trading Matrix here. In this video, we're going to take a deep dive into crude oil and why I believe we're going to be seeing a resurgence in the coming years or even months to see a price move from about $20, which is where we're currently at, to about the previous high of $150. So we're going to start on the weekly time frame and work our way down. The first thing that I'd like to point out is, so we're obviously starting from this point over here, with that being the low. We've got our first impulse, corrective structure here, followed by another impulse up. If you wanted to label that piece, let me just move this. What you're looking at here is this is your running flat. And then from this running flat, you've got an impulse, correction, impulse, more corrections, and then a very impulsive upward. From there, so roughly around the GFC, this first crash has happened. So price went from 147 all the way down to $34 in a space of a couple months. So it was a very quick drop. Something that isn't necessarily something that wouldn't be considered sustainable. That drop was at an exponential rate. Following from that, you can see that we've had this corrective pattern that's brought, or that retraced the majority of this piece here. And then we have been continuing down from there. If you were to view MACD, you could see the amount of divergence we've currently got through these bottom pieces. This would lead me to believe that what we're in now is known as an A, B, and currently we're in a C wave. If that were the case, then we're able to connect these two points here. And if we draw a horizontal over here, just to denote the low of the A, we go across like this. You've got this internal piece over here, and then you've got this corrective structure. So it's actually a very simple look at what US oil is doing right now. In regards to the real world application, you have a finite resource that has an estimated 50 to 55 year lifespan left if we continue to consume it at the rate we have. So when supply does start to become lower, the demand will increase and this will skyrocket. There really isn't any two ways about it. You've got a limited number of years left on this commodity. And from there, we will see a rise of this price. Based on the technique analysis, we have an impulse, a correction. The next thing should be an impulse to break this high. If we're looking at a bit of a lower time frame, so let's go to the dailies. These moves, although they do look quite scary in the way that they're impulsing very aggressively to the downside. These impulses and the way they're moving, doesn't really have the continued momentum that they do need to have before going down. Because what you would see if this was to continue down is this price would have sat here, gone sideways for a bit more, built up some momentum in the form of consolidation before continuing down like so. When you see markets and things like this moving at a rate like this, yes, it does move very quickly. But what you can see is like a slingshot effect where they drop as quickly, but then they reverse just as quickly before going back up. So in regards to trading this or holding this stock, if you were to buy at any time around this point, or you were considering to purchase oil anywhere in this point, it would be a good investment. You'd be looking, if I was to take a guess as to how long this would take to reach that, I'm just going to base it purely off what's happened previous. If I was just to copy and paste that move and copy and paste this over here, this previous move went from 1990 to this one took 10 years from here to here. The question is this going to take another 10 years? It could. I don't think the supply and demand curve was really in question here. But at the moment, if we were to go under half a decade left of this, or half a century left of this commodity, this could actually rise at a much faster rate than 10 years. So if you're looking for an investment, say we'll say 5 to 10 year time frame, you could see a rise from about what we're currently sitting at. We actually dipped below the $20 mark today. So if we go $20, which is like here, we just touched it. Yeah. So we just touched that price today. It could go lower again. You could even maybe see this come to $10. That would be ridiculously good. But then from that $10, you could see it move up to that $150 mark. So anywhere in this price range is a really good purchase for a long-term hold on US oil. I repeat, this will be a long-term hold, anywhere between 5 to 10 years. Okay, but that was essentially the video that I wanted to make today about US oil. You have a commodity that has a finite is a finite resource. The supply for this will begin to run out, and the demand will stay as is, and that will cause a massive surge in the price of oil. That's it for this video. Thanks guys for watching. See you in the next.